Wow, it is good to be back. Hi guys, this is another Forex Friday, and feels like we haven't been together in a while. I was away last week, but it was really only just a week. But nonetheless, it's really nice to have you guys. If you're new here, welcome. And this type of video called Forex Friday is a video that I make every single Friday where we go over the trades that I took last week, what I learned, and all of those good things. Before we get started, is there anything that I need to catch you guys up on? Yes. I do want to mention that I have a new link for Wealth Simple Cash. It's not a sponsor, it's a referral, and it's just a free $25. I've been using it with my friends. You guys will get a free $25, and I'll get a free $25 as well.
Billy, I need more money.
It's really easy to sign up. You just have to provide your social insurance number, your address, date of birth, the name of your firstborn child. I'm absolutely just kidding. All you have to do is put in your email and you create a cute little username and they give you $25. You don't even have to use the service. You can just take your $25 and run. But if you are new to investing and you're not familiar with Wealthsimple, I've been using them for a really long time and I do really enjoy their services. But if you are interested in a free $25, and I mean, who isn't? It's super easy. It takes like 2 minutes and it's a free 25 bucks. So it's pretty sweet. So I'll put the link for that down below. So this week you could tell that we're starting to get into those later summer months that are typically pretty damn boring. Usually the first 2 weeks of August, a lot of traders take off and there's good reason for that. I'm going to be making a video coming up on tips how to trade in August because I really do think that it's one of the trickiest months out of the year. If you have the freedom of just taking a month off, by all means, take the month off. But for all of us that do want to trade it, I'm going to go over that. But we're starting to see this beginning to happen, this lower liquidity, lower volume, and more erratic movements. But in terms of fundamentals, what was really headline of the week was equities. We started off the week with a massive sell-off. It was about 700 points that the Dow closed by the end of the day. But then on Tuesday and Wednesday, we started to see a little bit more of a pullback. And this is really being driven by COVID fears of the Delta variant, all of that stuff that we're all pretty tired of hearing by now. These fears have really translated into the Forex market in terms of risk on and risk off. So it's difficult to build a longer term bias with these uncertainties. So it's really more of a day trading environment that I've been looking at. For example, you could see that on Monday when we had the really strong sell-off that GJ pound yen really dropped a lot as the pound was weakening and the yen was strengthening as a result. It's a tricky environment in that sense, especially considering the time of the year, but it's also a little bit easier in the sense that we're functioning more on a risk on and risk off basis. So it's difficult to build those longer term trade ideas, but those shorter term ideas can still be executed upon. This is something that I really struggled with a lot trading in the later summer months when I was trying to force a fundamental idea, a sort of medium to long term fundamental idea when there just wasn't one to be had. And so I would just constantly try and formulate one and then the trades would be losses as a result. So I've learned to just don't force it, just take what the market is giving you. So that's something to keep in mind that I wish I had thought of a little bit earlier on. Other than that, really happy to have you guys here. So I don't want to take up any more of your time. We're going to hop right into the charts and we'll look at the trades that I took this week and what I've learned. So let's do it. Starting off on Monday, we had this really strong sell-off, which I mentioned on my Twitter account was actually kind of likely because we ended Friday with a sell-off. And so it was going to be really interesting to see whether we bounced off of the support or if we continued that risk-off sentiment. And that's exactly what happened. We broke through the support and it really looked like we were going to head lower, and then come Tuesday and Wednesday, and now into Friday, we really started to see a buy the dip scenario. So this was really important to watch to get a sense of the risk sentiment in the market that translates to stock. So if you don't look at equities when you're trading Forex, I highly recommend that you start doing that. It really made a difference in my trading and it's helped me a lot this week. So I just want you guys to keep this movement in mind when we go over the trades that happened this week. The first one that I want to go over is this sell on pound New Zealand that I did not take, but I want to show you why. So the confluences were quite strong. It was a 38 fib. It had these two moving averages, which was the 200 and the 100 on the 4 hour. And we also had this trend line. It was a minor trend line, but nonetheless, it was there. Now, the reason that I didn't take it is because the area had already been tested multiple times, and you could see that we did technically make a new low, which would then revalidate the fib. However, because this was with the spread, it was at like the market open, I didn't actually validate it as a new low. And so I didn't take it because it was just really high risk because of that. But I wanted to show it because it did work, but it was higher risk. So I think it's something that's important to keep in mind when trades like this do happen. When an area has been tested so many times without making a new high or a new low, I tend to skip it. It worked in this case, but I wanted to show you guys that. Next one is a loss on Tuesday, which was a buy on pound Canadian. Now, I had a small position on this. I lowered my risk because of the time of day that it was taking place. Now, as you can see, it was this purple box area. It was a 50 fib. It was the round number at 1.73. It was the 4 hour 100 moving average as well as the daily 200 EMA. So this is the 4 hour chart, so you can't see that daily moving average. So there was a lot of strong confluences, but the reason that I lowered my risk, it was like 1/4%, so it really wasn't very much. It's because of the time of day that it was hitting and at the speed at which it was hitting this area. So it hit later in the day, I think 2 p.m. Eastern time, and was really taking a long time to get there. So it was showing me that there wasn't very much volume in the market, there wasn't a lot of liquidity, and so there was a high probability, or a higher than usual probability of price going through the area before bouncing, and that's exactly what it did. So it was a small loss there, but I wanted to show you guys nonetheless. Now, the most interesting trades and setups of the week, in my opinion, were on Euro New Zealand and Pound New Zealand. So I want to go over what happened with those, how they related, and what I learned. So the first trade that I had in mind was this buy here, this green box, which I wrote down as a 50 fib. It was the half psychological level because we were at 1.695, and we also had key level, this trend line retest, the 4 hour 200 and 100 EMA. So there was really a lot of confluences here, but I did not take it. And again, the reason for that was because of time of day and because there was not any confluences with other pairs. So there was no confluence with Euro Aussie or Pound New Zealand, which showed that there was really no fundamental move coming up for the Euro or for the New Zealand, because none of the other pairs were in a position for a buy or a sell. So it was too risky in that sense. So I didn't take it, which I'm very happy I didn't, because that wouldn't have worked out. However, I did have this other buy down here at 1.692, which I wanted to line up with Pound New Zealand, which would have showed that there was going to be a sell coming up on the New Zealand dollar, which is exactly what happened. Now, I also didn't take this area because that confluence hadn't lined up in time. I'm gonna show it to you, and I really think it's super interesting. So here, the reason I had this box was because there was the 4 hour 200 EMA, the key level, and there was also a 61 fib. Now, as you can see, we had this wick that moved up, and then we came lower, and then we eventually moved higher. When this first hit, we did not have the GN confluence. The GN confluence was this support level right here. So I wanted Euro New Zealand to hit that buy area at the same time that Pound New Zealand was hitting this support area. That would have added an extra really strong confluence, and the trade would have worked out perfectly like it did in this case. But when we first hit that box area, this was not at the support. It only came later, and when it did come later, it was too high of a risk to take the trade, but that's when this worked. I hope that makes sense. So this trade was not executed upon because that confluence didn't hit in time. This big wick here is when we came back down and we did get that GN confluence, but again, it was too late. This area had already been retested. So I really think that was the most interesting trade of the week. I learned a lot from it, and it really goes to show how effective it is at trying to line up pairs when you're trying to take a trade. So if you're looking to take a buy on Euro New Zealand, what's Euro Aussie doing to try and line up the Euro? Or what is Pound New Zealand doing to try and line up the New Zealand dollar? So I hope that makes sense. And the last trade of the week is a break-even trade that I took on Pound Yen. Really been well correlated with equities. So this was a tricky trade though in terms of the entry, because there's a lot of confluences, but they're all a little bit farther apart. So I got in at the bottom of this box, and because of the price action, I closed at break even, which was good because we then moved higher. So it was a 38 fib, a smaller 61 fib, the daily 100 EMA, and the 200 EMA, and a key level. So I encourage you to go on the GJ chart to try and draw up all of those confluences. But what was tricky is that we had these fibs that were lower than the daily moving average, which I'll show you. It's lower now because time has passed, but the bottom of the box was the 38 fib, and then the 61 fib was higher, and then we had the moving average in the middle. So I needed a wide enough stop loss to kind of contain all of those confluences. So I did have a wider stop. I think I used a 50 pip stop loss, but then again, it was only right at the top of the box. So I don't love taking trades like that need to have a really wide stop loss. So I do have this box that's higher up. The trendline confluence is out of time, but that may still provide a sell. I do think that pound yen could drop more, but it really depends on what equities are doing. If we continue to get by the dip, then a short on pound yen I don't think will be the way to go. So those are the trades that I took this week, guys. As you can see, there's a few that I had all lined up ready to go that I didn't take because of the thin liquidity and the low volume, and that tech levels aren't being quite as respected as usual. So really keep that in mind. August and late July can be a really tricky time to trade. I have that video coming out on the first trading day of August on tips how to trade in August. So keep your eyes out for that. If you made it this far, I really appreciate it, guys. As always, you have my gratitude. I will see you in the next video, and until then, peace.